Thanks so much for joining us today. I appreciate it. This is the Alliant Group webinar on IRS enforcement update. So very thrilled to have you here. I think we're going to give you an hour of very good information about what's going on with the IRS and their plans for the future in terms of examination and audit. Joining me today are Eric Hylton, who's just joined us, and we'll talk about him a little bit more. You can see his background there, former commissioner of SBSC at the IRS, and then years of experience in the criminal side, criminal investigation side of the IRS. So thrilled to have him join our team at Alliant. Steve Miller, I don't know, many of you are familiar with working with him as the former IRS acting commissioner, but also held almost all the major jobs at the IRS, head of LB&I, head of TEGE, and oversees our work at Alliant National and working with so many of you on the phone in terms of issues and matters you're seeing before the IRS, kind of a part of the Alliant Group work that some of you may not be familiar with, but we do a lot of representation work for folks before the IRS. And then I think some of you are familiar with me, Dean Zerbe. I was senior counsel, tax counsel for the Senate Finance Committee. So I just wanted to pause on Eric for just a moment because he's new. We're just, like I said, so excited to have him here. When I was on the Hill, I would tell you he was just so well respected in terms of his knowledge and being so well grounded and just formidably familiar with everything going on in the area of tax evasion, and you name it. Not a sparrow fell that Eric didn't have a good handle of what was going on and how the IRS was going to respond. And Steve, I don't know if you want to say a word or two. I know you had firsthand experience with them at the service.
Yeah, absolutely. I couldn't be happier that Eric has joined us. And he is, he was at the time and remains remarkably bright and effective and knowledgeable in all areas of the service. When I knew him, we were in the early 2000s. We were working hard to push forward on international issues. And so, we had a large international presence in large business and international. We had a very large presence in criminal investigation. And Eric, at that time, as we were pushing forward, and it was a time of, later in mid 2000s, it was a time of pushing forward on bank secrecy and on other countries' bank accounts. And Eric, we would meet almost every couple of weeks. It's probably too much for Eric, but every couple of weeks we would sit in a room with a whole batch of folks who were doing nothing but trying to beat down bank secrecy, trying to open up the world so that offshore accounts would be known to the IRS and to other countries. And Eric and I worked very well together, and I was unbelievably impressed with him at that time. So I couldn't be happier. He spent a tremendous amount of time in small business and self-employed as well. He was in tax exempt entities at one time. Eric has a broad base of knowledge around the service, both from being a CI person, but also from other areas. So welcome, Eric, and it's wonderful to have you. That's what I could say. Go ahead, Dean.
Go ahead, Eric, any words, and then we'll head on to the, go ahead.
Yeah, thanks, Dean. Thanks, Steve, both for those kind words. I mean, it's truly a pleasure to be a part of the Alliant Group family. It's been about 7 weeks now, and it's been fascinating. I mean, just looking at the diversity of work and working with legends like you guys, Dean and Steve, and
making me feel old.
Mark and Kathy Petronka, and so many others that are just make up this formidable team that we have here at the Alliant Group to really provide you, I think, the best service. And my 26 years as being a criminal investigator was just a fascinating journey for me. And in regards to just working international tax evasion cases, public corruption, terrorist financing, laundering. I got an opportunity to interact with Dean on some whistleblower activity as well. So it's just been a fascinating journey, and looking forward to bringing that experience to Alliant Group and having some fun, some more fun. And so look forward to working with all the CPAs and tax practitioners that are on the line.
I like it. I like that working tax and working with the IRS is fun. That's the positive attitude we like.
It's all in
Can be.
perspective, indeed. It's all in perspective, right? It's like, yes.
It's like when I was in the Army, my drill sergeant said every day's a holiday here in the U.S. Army. Yeah. So I just wanted to touch briefly for the listeners, kind of setting the stage of where we are on things here. The tax gap has made a lot of the news here. It's for the new administration coming in. It's kind of their cure-all for, well, where are you going to get the money for this? And they said, well, we're going to squeeze the lemon and get money out of the tax gap, the amount of money that should be collected but isn't collected. And so they've made this very much front and center of what they're going to do. And then that drives, we'll talk about that a bit more, kind of the rest of the train in terms of funding and exam. But Steve, Eric, anything you want to chat up on tax gap?
The only thing I'll say is, look, the numbers are remarkable. When I testified in front of Congress, the tax gap was a little less. Commissioner Rettig sort of threw out a bombshell at a recent hearing, said, could be closer to $1 trillion. We really don't know, but it's the difference between what we think should be paid and what is paid. And it's a remarkably large number, and no surprises. If you are receiving third-party reporting, you're in the 80% or 80 or above in terms of compliance. Oddly enough, poor wage earners, us. If you're withholding on that amount, you're in the 90s. If you're not doing withholding or reporting, you could be anywhere from the 30s to the 60% compliant area. So that's why you're going to see a tremendous amount of reporting requirements being discussed, as well as more bodies. But that's basically the story of the tax gap.
Right. And Eric, I didn't know if you want to add anything to that. Go ahead.
No. I mean, I agree with the both of you. I mean, I think if you also look at the president's Green Book agenda for tax and think about the number of particular tax forms that they're trying to pursue from an electronic standpoint, I think that's only going to help matters as well, because we'll point to that a little bit later. But as you get the returns in electronically, then you can kind of use data analytics, and then you can also move more towards going after issues of non-compliance, so which will really address the tax gap.
Right. Right. And well said. And then kind of laying over this as you gentlemen are talking is that we have seen over the past number of years a steady down run of funding for the IRS, and then the enforcement presence, I'd say sadly enough, to the service presence, to people answering the phones and all the kind of what I think was the soft side of the IRS. But Steve, you can walk us through the numbers here. I mean, this
very, very quickly, because you can see 33,000 down. That's sort of 17,000 enforcement. When you look at revenue agents, it's almost 7,000 revenue agents less than in 2010. And that's a ton. Let's use a technical term. That's a ton of revenue agents. That's a lot of exams. So you see the reduction of audit levels to historic lows. When I was at the IRS, and the millionaires and the super millionaires, they were anywhere in the range of 4% to 7% to even over 12% rates of audit. They're 2% now. I mean, it's stunning, and there are pieces that are sort of building up, and this is why the Green Book has come out, why Biden's budget is what it is. There's been a report, top 1% fails to report 20% of their income. That is based on data from 2006 to 13. It's old data, but it is IRS people that put that together. And the last one is from a TIGDA report, a Treasury Inspector General report, that sort of pointed that the IRS said you have 900,000 high-income people that show evidence of non-filing, and you haven't touched 400,000 of them. And so that sort of sets the table, along with the tax gap discussion, as to why some former commissioners and others have pushed for funding the IRS, and why Biden has come out with the proposal he has. So let's move towards that.
I just wanted Eric to just touch on one area. Eric, I know you've seen firsthand on the CI side where can you talk about that just real briefly for us?
Yeah, I mean, as we look at the reduction here in audits, but there's a 53% reduction in the number of tax-related prosecutions from the previous years, as well as a 60% reduction in convictions. So when you don't have that law enforcement arm and really showing those convictions out there, it has an impact on deterrence and compliance. And so I think what we're seeing here is a great business case as to why the IRS truly needs this funding, not just from an enforcement standpoint, but also from a technological standpoint as well.
Right. Well, let's go to that. So Steve, here's kind of what the administration's put forward in its budget, pretty robust funding over a long period of time. Take us through it.
So very quickly, because we want to get to the meat of what the IRS is going to focus this. One, will they get something? I think we're all in agreement they're going to get something. The 2022 budget, the next budget is being considered for a 10% increase up to 13.2. That's real money. The IRS has been down in the $11 billion period, and they've moved up in the last couple of days. What's interesting about this, and Dean is as he probably should be, a little skeptical on this, but what's being suggested is stable funding for the IRS, which is in advance of each year's budget process, which is maybe the worst process ever in terms of the IRS being able to plan what it's going to be able to do in a year. It doesn't have its budget generally until 8 months into the year, for example. It's a difficult way to plan. What's been suggested is a 10-year program of approved funding with a 6% increase each year. The claim that that folks are making in the government, $700 billion in new revenues from that $80 billion total expenditure over those number of years. The reason why they're going with 6% a year is the IRS really can't take much more than that and function. You can only take so much in a year, incorporate it as you move forward. But there are other individual external sources that put the amount that could be achieved at well over $1 to $1.3 trillion, depending on who you're talking to. I don't know,
Right.
but I do know stable funding would be wonderful. Go ahead, Dean.
I think there's agreement just for folks listening who are like, well, I do think that there's fairly significant agreement amongst Republicans. I think the Dems are all in, but the Republicans, I'd say at least probably 20, 30 of them. I'm thinking the senators of the 50 Republican senators are probably sympathetic or supportive to one degree or another that the IRS needs to get more funding. And so I think there'll be support for this. You're right, Steve, about the long term. The crunch is that there's always these desires to kind of put things off budget and whatever. Our listeners probably don't need to be bogged down with that, but that's where there's kind of going to maybe be some diversity of opinion of, yes, I'm for more money, but no, I don't want to dedicate it. But take us, part of this is all driving, like I said, it goes back to they need the monies, they want to deal with the tax gap, they need to get more resources. And then this is then driving what they think will be the results, Steve and Eric.
Right.
Take us through that.
And so Eric, jump in, but and we'll talk more. We already talked about the recent budgets and the decrease.
Yeah.
For just 30 seconds, the IRS is the sales force for the United States. The IRS brings in the revenue, and much of that is automatic, as we talked about, through reporting and withholding. Much of it is not, and the IRS needs to do a better job of, one, supporting people who want to comply, and that's the call sites, which are terrible right now. It needs to get to the mail faster, because that's terrible right now. It needs to get that practitioner line that you guys are hanging on for hours and hours and hours at. That they need to get that better. All these things on the service side need to get better, but overall, even when you consider the service side stuff, pretty good evidence that for every dollar they spend, roughly $4 comes into the government. Now, I will tell you that the call site, the collection call site, that's like $11 for every dollar you spend. There are pieces of the IRS that are remarkably more efficient in terms of bringing in dollars, but that's not what we want to do. We want to bring in a balanced group, so you're at that 4 to 1. And you want to look at the very bottom, the 8,000 new employees. That's for this coming year. That's
Oh.
not over the course. It's much larger
Right.
than that. Right.
Eric, any quick thoughts on this?
Yeah, you know, as I think about, I think everyone within the overall tax ecosystem will support and think about the increased funding for the IRS. I think everyone recognizes what is needed because if you're a compliant taxpayer, you want the IRS pursuing the non-compliant taxpayers. You don't want IRS auditing individuals and you get a no change and different things of that nature. You want the IRS going after the individuals that are not as compliant. So looking at this, you know, the IRS has changed its thought process, and it's really, as we talk about an increased audit rate, and that's consistently traditionally been, you know, the terminology that we've used, but they've changed that with this recent 2020 data book, in which is the compliance presence. So I mean, maybe no, the 2019 data book, and the compliance presence that is here, and really showing that its impact throughout, you know, throughout the country. And so, and what makes up that compliance presence? Because Commissioner has consistently expressed that he wants to be in every neighborhood. And so part of that is just not field examination. So that's just one part. But you also have correspondence examinations and really looking at how do you increase that as well. But then you also have math error, you know, notices that actually come out and they that touches taxpayers. But then from a collection standpoint, you have the automatic substitute for returns program, which individuals who are non-filers, things of that nature. So those are coming out. Then the service also has the automatic unreported report program, in which individuals who may receive a 1099 is not matching up against your return. Then, of course, you have other enforcement activities, whether it's from CI and some of the other functions. So you kind of look at it from a more holistic perspective, because if you're a taxpayer and you get a letter or you get some type of notice and you know, your clients out here actually receive something, you know, you're thinking it's an audit. So I think the service is kind of thinking about it from a really a holistic perspective. But I think I want to kind of put into to light a little bit another quick point from the standpoint that not only did you have this reduction in the workforce and budget, but you also had all these other different legislative changes that have impacted the service and added on to, so it's like a perfect storm. So you have all these legislative changes that the IRS has to do, just thinking about just last year, just all of the stimulus payments and different things of that nature. So, you know, so it's a perfect storm for the service in regards to really trying to manage through this.
Right.
But you know, some light around the horizon here, though.
Right, well said. So we actually had a question. I would encourage folks, as you have questions, please feel free to put them in the question box. We'll try to get to them. And if we don't get to them by the end of the presentation, that's all right. We'll come back to you and respond. One question we've gotten is, well, okay, given the increase in the budget, it can't all be going to a new personnel, given the numbers going on. And I think this is where a lot of the money is going, fellas. You know better than I, but I think you're going to see a lot of money trying to upgrade and improve the IRS technologies, and try to bring them up to date and working away. What do you think is kind of the priorities there for the new technology?
So I'll start, and I mean, feel free to chime in, Steve. But I think it's, I mean, I think it's well documented that, you know, from a technological standpoint, that the service is well behind in a number of areas. I mean, they're still using some programming language that was in from the 1960s, and just, I mean, I think the taxpayer advocate kind of said it best. Is just you're building on an unstable you know, foundation, and you continue to build on that. And so I think there's some serious, significant technological changes that needs to be made. And so when we think about it from a more efficient targeting of non-compliance, inserting not only you know, technology, but also I think the part of this, the service to kind of figure out a sweet spot for this and matching up your data scientists with subject matter experts so that you can be a lot more efficient as far as areas of non-compliance. And that's really the direction that the service is really moving towards, and partnering with a number of different data analytics, you know, companies to kind of look at various areas as it relates to maybe the sharing economy, gig economy, different things of that nature. One area that is pretty hot for the service right now is the marijuana industry, the cannabis industry. So that's another area that you're going to see some additional focus. But I think you're going to see more of an overhaul of the technology for the service as this funding comes in.
Interesting.
And I think
Any thoughts?
the only thing I would add is, if you were to ask me, if you were to ask Eric, if you were to ask almost any IRS executive at a high level, what's the first thing they would do with the dollar? It isn't buying people. It's not paying people. It's technology. It's trying to get smarter in technology. It's trying to make it easier for people to file, easier for the service to access and utilize that data, easier for the IRS to communicate with the taxpayer on an automated or on a minimal human touch basis. Those were all things that have nothing to do with those 8,000 people. So that is what they're trying to use in terms of the money.
Yeah. Well, and that plays into, so they've got, talking about kind of taking advantage, this has become very hot and popular, this idea of the banking accounts, and that this, I would say a little bit cynically from my viewpoint, a little bit the new thing that's going to be the cure-all for the service. I hear you. I think they need to do a lot better with the information they've gotten. We'll see about Congress giving the authority here. They may, just because it's something that could score, and that the joint
It will score.
is say that again, Steve.
It will score. It will.
Yeah,
be
it will
revenue
score.
rate.
Well, they're scoring, then they're scoring. But right, and that would probably maybe push it, because I think this is gonna. We'll see how this travels. I think that the latest kerfluffle of the information being brought out, and that we haven't gotten a definitive word of how that happened, maybe didn't help things in terms of it, but this is certainly out there on the books for folks to think about. But take us through it, Steve, and then I want Eric to talk, and Eric obviously to comment about it too, but I for sure want to make sure I get your guys' thoughts on the cryptocurrency discussion too.
And I think I'll leave it. I'll let Eric start, because he's lived it, and I'll turn it over to you, Eric, and then I'll come back.
Yeah. So Dean, to your point, so I spent 26 years in CI, so I'm an enforcement guy. So when you say additional reporting, I get excited. But as we look at this and thinking about bank account flows and talking about gross inflows and outflows, breakdown by physical cash in between accounts and different things of that nature, as well as foreign accounts and transfers between each other. I think that's going to be debated quite a bit in regards to whether the service should get that level of reporting. But the question remains, is this valuable information? And I think to some degree, it could be somewhat valuable. Now, I'll skip over 1099K for a second, but cryptocurrency. Okay, so everybody's talking about cryptocurrency. And so the service came out in 2019 saying that you actually have to report it on your tax return, whether you had to sell, acquire, purchase, etc. Cryptocurrency. They sent out notices as well after doing a John Doe summons on Coinbase, and to some individuals. So now we're getting into some more additional reporting or proposed additional reporting as relates to cryptocurrency, and similar to, and some folks here should be familiar with the Form 8300, in which if you're in a trade of business and you come in with more cash over $10,000, then you have to report that to this, defense and to the service. So the same thought process here with cryptocurrency. And so anything over $10,000, there's proposed that there's reporting. But I think another part of that is also requiring brokers to disclose beneficial ownership information. That is important. Here again, in my international travels and working with various countries, around the world, beneficial ownership is one of those key factors, from an investigator standpoint, that has been, a significant issue of vulnerability. So requiring brokers to include that information, I think, will be beneficial for the service. in some regards, because a lot of individuals will hide behind various shell companies, et cetera. And then as we look at, I spoke a little bit about this as well, just requiring proposed changes for electronic filing for taxpayers over 400,000, certain partnership returns, gift returns, estate tax, and corporations over 10 million. I mean, I think to some degree that sounds like a no-brainer in some respects. I mean, IRS has to improve their technology in order to accept all these returns, but I think it really will help individuals from a compliant and a non-compliant standpoint, because then the service will have this information electronically, and then they can concentrate on those individuals who are non-compliant. So I don't know, Steve, if you want to touch
Just
on 1099.
quickly on that electronic filing, because I know our accountants listening will be hugely interested. I would expect the Congress not to give much grind on that. They might on the banking, like I said, that may get them. But well, I mean, Steve, you and I have lived this. I mean, we put in a number of increases on electronic reporting while Commissioner Everson was there, and we basically did it. I think we kind of slowly boiled the frog, if you will, but we did it. I mean, is that your kind of remembrance as well?
No, that's right. And look, the issue is all about transition, and there's no good argument that I should be able to file a paper return. But there's a good argument that forms aren't ready yet, that I can't, that the system doesn't work. All of those things are transition issues. So, but there's never really been a wonderful argument for these types of taxpayers, big taxpayers, that they shouldn't be filing electronically. And that will help the IRS access that information. You and I, Dean, we had the wars of the 1040, we had the wars of the Form 990.
Yeah.
And eventually that got done, and it takes time. And at the front end, the IRS needs to be cognizant, Congress needs to be cognizant of transition, but there's no reason why these individuals, which are pretty large and pretty specific, why they shouldn't be electronically filed. On the 1099K, I think it's sort of the same, it's roughly the same additional requirements as they're going to require on bank account flows. So for example, the 1099B is going to be bulked out, in other words, for these things. The 1099K, of course, as you recall, is the credit card reporting stuff. And that's unbelievably important, because that's the world we're living on is not necessarily a cash, but to the extent that entities are receiving credit cards, that's getting reported to them and to the IRS, and it has to help. We have a pretty robust tax controversy area. We were approached by I'll just say it, but by a nail salon that had receipts, and they were missing about $200,000 in a year against their credit card receipts, and the IRS came knocking. Not a shock, right? So that has meaningful impact. Whether the IRS actually needs all of this, they need some of it at least, and we'll have to see whether the Congress plays along or not. I'll let the other thing I just want to mention very quickly. There's a batch of stuff we're not going through here. A batch of stuff that we're not going through because it's sort of statutory in nature. But the Biden proposal contains a paid preparer provision, like restores to prior rules, basically.
It reverses loving, isn't that essentially what it's doing?
Reverses loving and allows the IRS to regulate paid preparers again. It has a remarkable number of other things like step up in basis. It has a batch of what I'll call penalty provisions against those who make over $400,000 in terms of 1031 not being available to them, 199A not being available. There's a whole world of these things that we're not talking about, guys, right, but will be a part of this discussion going forward. Go ahead, Dave.
Right. No, I mean, this is just purely the enforcement side. On the tax side, we've done webinars on those. We'll do more in the future. And yes, there's no end of joy on the tax increase side.
And increase to 6 years statute in terms of listed transaction audits. So when we talk about, so there's a batch of other stuff in there. Some of it really is enforcement related. we just don't have time today. Give us a buzz, give me a buzz, and we can talk it through.
Yeah, I would say to all those, Steve, I'm very interested in what's going to score and not going to score. To me, like loving, and I'm not trying to debate you on it, but for me, it's just, how can I put it as a prognosticator? It's easy for me to just say, if it doesn't score reversing loving, then it's out because it won't survive a bird bath. This is probably, well, I don't know right now. So right now the discussion is that they're going to use this increased revenues from IRS exam and tax cap, all you're talking about, to pay for the highway bill, that this is what everyone can get comfortable with, as opposed, and do the tax increases issues in a separate reconciliation bill down the road. So they may have the votes to, quite frankly, do it. And I don't know if you're really gonna have a Republican saying, I'm gonna lay down and die if you bring back Circuit of 230 and reverse loving.
Right, but your point is well taken, that reporting, if it scores, is going to be more palatable to some than increasing the corporate tax rate.
Right, that's right. And then, and then things that don't score, but that seem to grind, you'll at least get people in a reconciliation saying it's out because it doesn't score. But even outside that, they'll be like, well, why are we doing this kind of thing? On the positive side, I know you gentlemen do too, and it's not just iWatch. I think it's very important for the service, if they're going to want to maintain 10 years of robust funding and robust enforcement presence, they have to have hand in hand with that a strong service presence. I mean, I know you all agree with that of, yes, we're answering phones. Yes, we've got our phone lines open. Yes, we're doing all these things to do that. I think you're going to matter a lot as well too. So you can,
and a huge number of people, and look, it can never be just enforcement. It has to be service, because you have folks that are trying to comply, and the IRS needs to help them. They just need to. And you have people who want to comply by paper, by sending it, by replying to notices, by reaching out for some help. That needs to be restored, and it is under the budget. We'll just have to see how it works out, though. But this is
anything on that? I know SBSC. Go ahead, sir.
No. I think to that point, I mean, as we have this slide here, as far as improving customer service, the service is, is looking at how do we have more of a seamless experience, and then try to, for customers, okay, what is your preferred method of working or working with the service, whether it's through the website, telephone, in person, mail, different things of that nature. So as time progresses, as we look here, definitely we'll have additional customer service representatives. When I was commissioner for small business self-employed, and it pained me that we could not answer calls for individuals that, potentially that we have, levied a bank account or different things of that nature. And so I know the commissioner recognizes that this is a high priority for the service to improve that, but we try to work smarter in some regards to that. So how do we use technological improvements? So the service is looking at using artificial intelligence to generate and to improve their chat box. So kind of having some machine learning conversations with individuals, connecting them to the system. So that's on the start. The second part is here, as I look at this, just the whole notice redesign strategy and behavioral science, very similar to matching up the subject matter experts with data scientists, doing the same thing from a behavioral science standpoint, and redesigning notices so your clients may get notices, you may receive the notice. And so the whole thought process, how do we reduce that cognitive load on these notices here? And so you really look at, okay, changing that up so that it becomes more plain language. So another key factor that we use with that is we inserted, well, the service, I keep saying we, like it was 30 years, so it's hard for me to go away from we.
Trust me, Mark Everson, we still have to have him.
You've already started, Eric, with the when I was the SBSC
commissioner. But we added this QR code on notices because most individuals have a smartphone. And so then you take that QR code, you can scan it, and you go directly to the page on an IRS website to be able to say, make a payment, set up an installment agreement, offering, we're going to move towards an offering compromise. And so those are the things that are just going to improve tremendously. So then the service doesn't have to answer that phone call, and then they can address certain other issues. So, it's definitely looking at moving in the right direction.
And
Right.
important to that is for people to remember that, and I'm sure this is still the case, but when I was the deputy commissioner, now, but you limited the number of notices you sent out.
Right.
To those that you thought you could actually answer the phone of.
Right.
And so without having those people on the phones, the whole process slows and you don't go as deep in that bucket, which is not good for compliance and it's not good for collection or anything else. But that's sort of the world we live in.
Well, I'll be a happy day if we could realize the dream we had when you talk about when I was on the IRS restructuring committee. Our great hope was that we would be able to have a situation where a taxpayer would call up, say, well, I got this notice, as you fellows know, and then they have to call, call us back in 2 weeks. And then it's someone completely new and you've got to, start the whole story again of, that kind of deal, that they could say, oh, yes, I've got it all here. Yes, Mary, I remember the case, that guy. So that would be dreams. But I know so many of our folks listening really want to get to the heart of the order here with, okay, tell us, what is the IRS waking up thinking about and focused on here? And Steve, Eric, I'll let you take it away. A lot of this is coming from the tax gap and the cries for more revenue. I mean, they're clearly banging the drum on these folks, but go ahead, gentlemen.
So I'll jump in, and so there's a lot of discussion that's been centered around high net worth individuals. Obviously, we see here the ProPublica story that came out as far as wealthy individuals and whether they're paying their fair share of tax and things of that nature. But let me just start here with the high net worth individuals. There is a concerted effort by the service to pursue and audit high net worth individuals. Now, there was even a stronger effort to even look at individuals over 10 million, but even looking at individuals over 1 million. I know we talked about how the service is acutely aware of that reduction, but I think a key component to this is to look at the individual or the high net worth individual more holistically. So you always, to a large degree, had an individual who was either being audited by SB or LBNI, and maybe even have some components in which TEG could have kind of had some insight into it. So when I was there, we were looking at is really kind of having a consolidated effort amongst the operating division. And I know in my time, there was, I hadn't seen the level of cooperation that I was looking at, over the last couple of years, in which really trying to display and show that level of cooperation to address high net worth. So it's going to be a significant priority for the organization. Then I have down here as well, high income non-filers, and which is a little different, and that the service needs to really reconcile that a little bit as to the definitions of them both. So high income non-filers are individuals that are making over 100,000. So part of what and they have not filed. So I brought my CI, background in a little bit. And so what we have is Operation High Def here, in which we came, the service came in, and you can go into geographical locations, which we saw using a heat map and seeing that you had high instances of non-filers, and you bring in revenue officers in for a week, and you do sweeps, and you go out and do education visits, and then you start looking to see if you can collect a return, whether it's employment tax returns or individual returns, and you would do it for a week and see what you could collect and different things of that nature. So it was tremendously successful. We would actually do publicity associated with it, like we would say, we're coming to the state of Texas or the state of Arkansas, and that was and that generated an additional returns that were being filed. So I think both with the high net worth as well as the high income non-filers, the service is keeping it as a high priority.
So Eric, I just want to
go ahead, Steve.
Go ahead. No, I just want to underline it and put the hammer down on this one. If you are looking for the single area that the IRS will expand on in the next 5 years, this is it. This is where they're getting their money. this is where the political will probably will allow them to go. When I was there, it was offshore bank accounts where you have, and there's pluses and minuses to ProPublica. I'll go to that in a moment. But if you look at high net worth individuals, you'll see more audits, you'll see more matching, you'll see more enforcement in all that area, not because of the political pressures that you see on there, because the IRS doesn't reflect very well the political, political pressures political oversight is one thing. Of course, that happens. Political pressures are a different creature, and the IRS doesn't really respond that much to it. They are going to respond to high net worth individuals by more audits. And you look at the 400,000 and above, that's the focus of this bill. You look at the 10 million and above that Eric talked about, of the very wealthy, and then there's the super wealthy, and you'll see an addition, and you've already seen that. We've already seen that in our practice of the global high net worth audits, and what Commissioner Reddick calls the wealth squad. Those are going to continue. They've started, and we actually have litigated one of them already. But that's what you can expect in the next 5 years. If I'm talking about where we're going to see a lot more, this is where you're going to see it.
Steve, for our listeners and for Eric too, I think part of this that I want to make sure you explain and tease out, because some of this has been coming from some studies in academia, but when you look at those and you kind of burrow a little bit deeper, you're all absolutely right. It's the high ends, but there seems to be an extraordinary interest too in multi-tiered partnerships, which is hand in glove with the wealth. Can you walk us through that for a minute or two, Eric or Steve, whoever wants to start?
You want to start? You want me to start, Eric?
Go ahead, Steve, and I'll add.
Okay, so you're exactly right, Dean. The IRS has never been good at, and I think continues not to be good at, auditing partnerships. And you saw the death of TEFRA a few years ago was sort of a result of a recognition that TEFRA was built on a world where partners of 100 and fewer, 20 or fewer, were the partnerships you saw. Now you have hedge funds with 50,000 partners and tiered partnerships. The IRS could not handle those. So the process has changed there under the new statute, the new statutory ability to audit for the present and have the past, but audit for the past and have the present pay. The world's a very different place. And most importantly, I think that you'll see, and you do see now, and Eric mentioned this, when you see a very wealthy person, you don't see a 1040. You don't see a 1040. You see a myriad of LLCs, a myriad of partnerships, a private foundation over here, and a world, a web of entities around the family. You don't see a 1040. You shouldn't be auditing the 1040 without looking at the entire, the entire global look at what that family and what that individual has. And that's what the service is heading towards now. But that's sort of, the IRS has not been good at it. They're getting better at it, but they got a ways to go. And part of that, key part of that is technology. Go ahead, Eric, sorry.
No. I think you're just absolutely right on that. I mean, I think as we talk about partnerships and BBA and all the rest, that's the service is going to is put a significant amount of attention as it relates to partnership. Just prior to me, for about a year and a half or so, the service established this data analytics strategic integration board. And looking at various initiatives and partnerships is one of those, because there was such a high no change rate on it. So, I mean, I agree very much with you that, partnerships is going to be a level of concentration as well.
Right. Let me, thanks for, so basically, I guess the message is for the wealthy, the honeymoon's over. So the cryptocurrency, Eric, we talked about this a fair amount, but to take us through, and I know, Steve, you've been working with clients who've got crypto issues and everything. So maybe both of you gentlemen take us through anything else we want to make sure we cover on this. And I'd really like to hear too of what you think are best practices if they're getting the letter in the mail. So go ahead, Eric, start us off.
Sure. I mean, I think we could kind of flip to the next slide,
Yeah, that's a good idea.
and so obviously cryptocurrency is an issue. The commissioner talked about the tax gap, and he attributed, a large portion of the tax gap being related to cryptocurrency. I mean, I think a lot of individuals are thinking about it. If you see Bitcoin 2017, 18, how it rose up to at that time, I think it was 18, 19,000, and everybody was excited. This year it went up to 60,000 a coin. And so, but if you think about the whole cryptocurrency industry, the market capitalization being almost 2 trillion globally. So there is a lot of attention and focus on this whole new, I think, financial ecosystem. And so the service has put a stake in the ground as relate to cryptocurrency, and gone with a number of John Doe summits just recently. We're Kraken and Circle. They already previously did the John Doe summits against Coinbase, and then which subsequently led to letters being sent out to taxpayers, believing, hey, that you may have um, earnings towards cryptocurrency. I mean, everyone has to have a full understanding that cryptocurrency is considered property. Now, as far as we look at cryptocurrency across the board, I mean, I think there's a lot of probably still confusion because it can be considered currency, it can be considered security, it can be considered a commodity, it can be considered property. So you have all these different issues, but the service is trying to come out with some additional guidance. And I think this is where I think we could help quite a bit in regards to individuals who have cryptocurrency transactions, and looking at how we can help them, making sure that they're reporting it accurately. But this is an area in which, if you have received a letter, I mean, it's something that I think you need to probably get some advice on, and we can provide that
And don't
advice.
ignore it. And don't
Don't
ignore it, because the IRS is getting an awful lot of information, and they're going to act on the information. They're going to start with the educational letter. There's 3 types of those, and then they're going to move on to a more serious. We have folks that are talking to us, and you just don't want to ignore it. You want to take a look at what your next return is going to be, where you are. Eric is absolutely right. The IRS has put out some guidance, but it's not great guidance, and they've added to it in the last year. Sorry, Eric, it's not great guidance. They have a bunch of frequently asked questions. Bottom line is they don't think it's a commodity. They don't think it's currency. They think it is, in fact, property. And that's where you start. They've put out recent guidance on forks, which seemed right to me. And most recently, it's going to be interesting. Should it be considered foreign currency now that a Central America country is dictated that it's
El Salvador, right?
El Salvador said it's an available currency for them. The world's an interesting place, and also the world is changing. Canada, for example, just got I think they just received their view of a John Doe summits with respect to one of the exchanges for their folks. I have no doubt that through the treaty exchange program, we'll get those at the IRS as well. So the world is the way it was in 2010 to 2012, where the banking area is probably where we are now in terms of cryptocurrency. The world's going to get to be a smaller place and a much more known place for folks who are dealing in cryptocurrency. You should get ready for that now. And so, I think that's what I would tell people.
Right. Well said. I know it's an area you've been working a great deal in, Steve, and we're thrilled to have Eric in here. I think Eric's going to be basically heading up all of our crypto work at Alliance. It's just such a huge, growing area. So, let us know any way we can help our listeners on that. Anything else on crypto, fellas, or did that kind of cover the waterfront?
Yeah, that's it for me.
Captives, I know we live and breathe captives and captive insurance. And Steve or Eric, I don't know who wants to go first. Steve, I know we're on the side of trying to get folks
through this. We're trying to get folks through this. We have an abundance of, we've got 5 captive managers that we represent. We've got probably 60 captives that we represent. Many of those, but not all of those, are under examination. We also have folks that are now in litigation with us. And it continues to be a journey for people, and the world continues to change just a little bit. I think it's fair to say, Eric, that the service remains dead serious about it. They've just committed a bunch of groups to doing this work. A bunch of new audits are coming out. Should not ignore them. What we do in these cases is we sort of assess out of the box where you are in terms of the spectrum of bad to good, and sort of tell people about how they should apply that finding to whether they should settle the case, whether they should fight the case. But it continues, and the IRS is now 4 cases to 0 in terms of wins in the tax court, and that creates a climate of high testosterone, I think, for the IRS is the way I would put it. But Eric.
No, I think you hit it on. I think you touched it really well, Steve.
Yeah. Wow. Well, here where they're, I think the IRS has had equally pretty much good success as well too. Conservation easements. There's just been a lot of work there, and as you mentioned, Steve, there's talk the Congress may do some things in here as well too to sharpen it all. But take us through this, Steve. I know you're very familiar with all this area.
No, and this is another. The captives was a transaction of interest in 2016. The conservation easements were actually a listed transaction in 16, 17, kind of spilled into 2 years. But what you see on there is what's going on. Eric's been intimately involved in it while he was at the IRS. We've been intimately involved on the other side of this. There's been a series of IRS wins. The IRS has not really gone after this in the fashion that you and I think they probably should, which is that there may be an overvaluation of the charitable contribution here. Rather, the litigators, being litigators, are looking for any little thing they can find that they can win. And so and they've been very successful doing that. You'll see on here the Pine Mountain Preserve case is sort of going in the other direction there, but who knows how long. That's just a place where the IRS wasn't allowed on a summary judgment motion to say that the perpetuity rule was violated. But that's a very specific case. Overall, as in the captive area, the IRS is sort of pushing forward. But Eric, I'll let you got much more recent and internal information than I on this.
No, I think this is another area in which obviously the service will spend a considerable amount of time over the next few years on syndicated conservation easements. And here again, you're talking about a cross-buy, coordination between LBNI, SBSC, and now even CI. As you can see here,
Right.
the Georgia CPA being indicted for just promoting the scheme and just having fraudulent charitable deductions. So and those are the cases that I think the service really wants to highlight, is because, some cases have been addressing the whole issue of perpetuity, but I think the service is really kind of going to be moving towards just valuations, because there was some extreme, like 1 to 25 ratios. $1 for $25 for every deduction. It was some outrageous cases that were there. And so I think the service is really trying to kind of clamp down, and really, when I was there, I was pushing for some of these cases to actually go over to CI for prosecution, because there was some of which is extremely egregious. But I think so we need to weed out those bad actors so that the original purpose of conservation easement could just kind of stay in play.
I'd say two things. One, somebody sent in a sort of a comment in the question box, which is exactly right. The conservation easement carriers prior to 2016 being targeted, the answer is yes. They're going wherever they can. They are doing everything they can to do damage to syndicated easements. That's one point. The other point is syndicated easements are not all conservation easements. So, for example, Dean and I, our firm has worked with people to do conservation easements, not syndicated ones, but conservation easements, traditional ones. And those are continuing to be done and should continue to be done because they promote conservation and done correctly, they should not be attacked by the service. And so far have not. So
Fly right though. You got to fly right. It's.
I think that's right.
In some of the cases, you're right, Steve. What I've kind of learned, and I know we want to get on to the next issue here, but is that you're right. They've been kind of getting them on this thing and that thing. It is reminding everyone of kind of dotting I's and crossing T's on these easements of better do it right. Now, I would say that, though, I think, Steve, you can correct me if wrong, and Eric, you can too as well, obviously. I think these get attention to begin with because they're outrageous valuation issues that the IRS never would have looked at them if they kind of passed the smell test, and they wouldn't be digging in to say, oh, well, I see your rule of perpetuity, blah, blah, blah. I think it's more, we're here. I'm going to shoot you out of the saddle with this one.
Remember that the notice itself, you have to be 240% of the deduction in tax benefit before you even have to start reporting. So it comes down to, and we've seen 600%, $6 for every $1 of contribution. And it's possible those are good. I mean, in all my years of getting calls, there was one that I thought, that makes sense. It was the property valuation was low, and things had changed. But in general, something of that size, if it looks too good to be true.
Yeah, you don't always have Disney World opening up next door. Yeah, so
right.
So the employee retention credit, this is a new thing, and this is kind of a little bit for folks listening, both things in the sense of, hey, this is a tremendous opportunity. It really got expanded and increased. So for your clients, it isn't just
got to be looking at it. That's right.
Revenues. It can also be, I had a partial shutdown. I had an impact by a partial shutdown. My supplier did. It's very, very broad how you can benefit. And we've been doing a lot of help with folks, helping them qualify. And it's been extraordinarily meaningful for these companies, these small businesses really getting through small and medium, quite frankly. Again, a good example. It helps a lot bigger class of employees and you recognize. So if you're not familiar with it or you kind of know just enough to be dangerous, talk to us. We'll be happy to. But part and parcel with that, Steve, and our kind of the windup is, it is something, it's billions of dollars that you've got to do it right. And Steve, you can speak to that better than I can about getting your ducks in a row now.
Yeah, so start by the fact that everything I say should not dissuade you from looking at this thing because it is given by Congress, it is valid, and it's very lucrative. It's a great credit. It is refundable. It's almost like $7,000 per qualified employee per quarter. It's a very lucrative credit that Congress has put in there to help folks. And so you absolutely need to look at it. And if you need help, contact us, we can help. It's also something, as Dean says, the IRS is going to look at into the future. Of course they are. It's a refundable credit. It's an expensive credit. They're going to be looking at it. And so you need to do it in a fashion that you put together the substantiation that's going to be there on your shelf if the IRS comes in. They may or may not do specific ERC audits, but if they're doing a general audit, they're probably going to check on this as well. So you ought to be ready for that, and it can be complex. Dean mentioned there's a couple of different ways that you can qualify: 20% reduction, period over period, or a partial or complete suspension, government ordered suspension. And that gets a little complex and is it can be met in many ways. And so you need to do it right, but you need to do it in a fashion that you substantiate it and that, everything that you did today is available to you 4 years down the road when they come knocking, in the same fashion that I would tell people, and I tell people all the time, on PPP loans, on PPP loan forgiveness, on satisfying the uncertainty certification. Document today, because it may be 7 years from now when they knock on your door and say, you remember how you were uncertain?
Why did we think we qualified? What was it? Oh yeah, he's long gone. That employee, yeah, that was the guy. Eric, anything quickly on that? And then I want to let us.
No. I think you got
okay. Recent litigation, Steve, take us through it here.
I think this should be a very, very quick one, and it's interesting. CIC Services, somebody challenged the validity of the 2016 captive notice the transaction of interest notice. And we are at the beginning of this process, by no means at the end, although the world has said, oh, the Supreme Court said this is bad. No, it didn't. What it said was that the declaratory judgment, the Anti-Injunction Act, doesn't apply to block the suit. So that's step one. Step two will be, okay, does it require notice and comment? Step three will be, was there notice and comment? Step four will be, what happens if there wasn't? And so we're at the very beginning. Why this is important is not because of the captive notice at all, truly, but because of all the other information that the IRS is putting out, and whether people will be able to challenge it in advance of enforcement because the Anti-Injunction Act doesn't apply. So we'll wait to see how this all turns out, but it's not, is it a big win for taxpayers? We'll see. It's certainly going to create an additional wedge for us to use representing folks by attacking whether the guidance is good or not.
Right. Yeah, I would say I agree with you. I think it's a real opportunity and something that we think, given the administrative law issues, that we need to be sharpening our pencils as we're representing clients to say, is this an avenue that we can approach as well too, as part of our representation? I just wanted to, there's a couple, 3 slides I want to make sure we cover before we let you all go here for the hour, and appreciate staying with us. This is what the IRS is looking at in terms of their new world of organization. This isn't in place, but this is what's being put forward. Steve, Eric, was there anything you particularly wanted to highlight for folks listening or watching that they should notice out of this?
Yeah, I mean, just quickly, I mean, if you look at this, and this is the impetus for is the Taxpayer First Act. And the main point that I really wanted to emphasize is over on the left-hand side, is you see the Assistant Commissioner of Compliance. And so you see a Chief of Compliance, a Chief Whistleblower, Chief of CI, which really is no change. But the main change you see is the Chief of Exam. And so you no longer see LBNI, you no longer see TEGE, you no longer see SBSC. You have that all pulled in together. And the theory behind that is to try to develop some consistency from an auditing standpoint, from a procedural standpoint. Remains to be seen, how much, how well that will go. That is a pretty hefty job, especially since I was in charge of SB, and I couldn't imagine having LB&I, SB, and all, and TEG all in there together. But this is something that it's notional, but this is where the service is thinking about.
See, in my mind, this is what happens with a starvation diet. This is the reversal of the 2000 reorganization and the focus on individual taxpayers. And as the former commissioner of TEGE, as the former commissioner of LB&I, as the former deputy commissioner, and as the former acting commissioner, I think notional is where it should stay. But that's just my view.
Steve, is it a coincidence they're eliminating all your former jobs?
Yeah, it's happened all the time.
Wow, you really left a legacy there. Yeah. So Eric, take us through this, the IRS Office of Fraud Enforcement. Dear friend, Carolyn Scheck, go ahead.
No, this is a new office that I started when I became the SBSC commissioner, the Office of Fraud Enforcement, just to elevate it. They had a national fraud program. The service had that, but it just wasn't getting the level of attention. And the premise behind it is the commissioner and put me in the position to kind of bring a laser focus on fraud throughout the service. So I hired a Damon Rowe from CI to kind of lead up this effort, and then we brought on Carolyn Schenk as the National Fraud Counsel, and they hit the ground running. And a couple of areas in which I think, I've already kind of touched on a high def, but repatriation suits and operation liquidation. So you actually have, for operation liquidation is when you have bankruptcy activity, and just matching that information up against FACA data. And they've already seen cases in which individuals who have filed for bankruptcy, but they have foreign accounts. And so that's something that the service is looking at, repatriation suits as well. And so that's another area. Ghost Employer Project, that's, a number with using data analytics. They've been hot and heavy on just finding employers out there who give their employees a W-2, but don't file it with the service, don't file it with the 941s with the service or with Social Security. So that's been, I mean, an area that the service is really hitting on. And I talked about really the cryptocurrency, the Operation Hidden Treasure, and just kind of looking at tax evasion signatures and structuring and different things of that nature to try to come up with a set there. And so then secondly, you have this, you can go back, to OPI, the Office of Promoter Investigations. Lois Dietrich, used to work for me in SBSC, and just really kind of coming up with a central point or agency-wide. Both of these offices is trying to come up with an agency-wide, perspective and strategy as it relates to promoters. And so you're going to see a lot more attention associated with promoter investigation, and more so abusive transactions, similar to some degree the syndicated conservation easements and abusive micro-captive as well.
Very interesting. So kind of a real, well, you clearly know it, Eric, but really, I mean, these are some of the brightest folks at the service. I recognize a lot of these names that you've placed in charge there. If you want to know where the tip of the spear was, it's these folks and these investigations. It looks like. Is that fair to say?
No, that is definitely fair to say. I mean, the folks with a lot
and you're
of
going to see, and presumably, when the IRS, oddly enough, when you focus resources on something, you see more of it. So we should expect more fraud penalty cases.
Right.
We should expect more promoter investigations.
Right.
Yeah. And so, if we, I think we've kind of gone over a little bit. There was one question I wanted to make sure we got to, and obviously, if you've got other questions, just email and we'll get you squared away. And obviously, as Steve has commented, we're here to help you with the issues you're seeing. The quick question I want to get, just to be courteous to the person who asked it, they asked about the gig economy and workers in the gig economy and whether that was going to be something that the IRS would focus on. I had my own thoughts, but why not talk to the fellows who actually know the answers? So Eric, let's start with you. How do you see gig work in the IRS's vision?
No, definitely. It's got, I mean, there's a lot of attention that's going to be placed on the gig economy. First, Steve mentioned this earlier, how do we educate, taxpayers first and foremost, and reflecting with that. There were a lot of conversation in regards to, could we change the process from a 1099 standpoint, pay as you go, in some regards with the increase in the gig economy. I'm not sure, where that's going to go, but there will be a significant amount of attention associated with the gig economy there.
That's going to be matching, right? I mean, it's going to be, you will see matching, and the attempt will be to educate and to send letters out, and then, they'll have to do more maybe, but it's a matching issue, and I would expect them to be enforcement.
And I apologize, I managed to gum up my, here we go, I'll get this back on. The last, I just want to get to this slide with our contact information. Oops, I managed to do it again. Well, I give up, folks. I think you've all gotten it there. I think that kind of covers it. Steve, I wanted to give you any last words as we say goodbye to folks, given you're heading up Alliant National, doing so much of the representational workforce in front of the IRS. Take us through that as we.
If you have any questions, guys, there's no cost to asking. Contact us. Eric and I are there to help out exactly the folks, friends of the Alliant Group family. Happy to do that, and look forward to talking to you in the future. And I can't even express how happy we are to have Eric here. That's wonderful.
I had one last point. I saw someone that said, "Can I get the slides?" Some wanted some autographed pictures of Eric. Eric can always.
Right.
That's right. He's available for that. But if you want the slides, I think the answer is just contact us or email us, and we'll look at doing that. I always have to kind of check with our masters in terms of how we're doing that. But I think if there's any information there that you'd like, we're happy to obviously share that with you. But with that, thank you so much. Apologize for going a little bit over. Eric, my joy for having you here as well too. And thank you all. And Eric is the last person we'll let you, as the newest person, we'll let you say the last goodbyes.
No, thanks everybody. Look forward to working with you.
Be well. Bye-bye.